All right, class, let's move on to the next portion of the problem. We've done the step 1 requirements to enter the journal entries. Let's go ahead and finish off the T accounts here. We need to give ourselves a balance. So recall from the beginning, we had a beginning balance that we added in here to these accounts. And now we've added our journals, our sales to total. So according to dealer, we're going to look at the directions that our accounts like to be on. So dividends like to be on the left, expenses like to reside on the left, assets like to reside on the left, liabilities are on the right, owner's equity on the right, and revenue is also on the right. So when I'm referring to left or right, I'm talking about where we're going to have our balances here. So the cash likes to be on the left. So for cash to be positive, it must have a left-hand balance. So what we're going to do is we're going to add the items on the left-hand side and subtract the items on the right-hand side to give us a cash balance. Now I am in Excel. This is similar to the project. So what I'm going to do here, we could add these in on a calculator, but what I'm doing is I'm adding these three pieces with pluses. Now I'm going to subtract out the items on this side. So I'd encourage you guys to follow along with the calculator and see if you get the same answer here. So we are ending up with a $4,200 balance. So I'm going to flip over here to the givens. Just another refresher. We had started the month with $6,500 in cash. We see that here in our T account. And then we're going to see all the transactions. So let's go ahead and look at this one. What we had here was an increase to cash because we provided services for cash. So let's go ahead and update all of our T accounts here. Accounts receivable is also an asset. It's going to be on the left-hand side. As we can see, the numbers here on the left hand are bigger than on the right-hand side. So let's go ahead and do our math here. So I'm adding these, and I'm going to subtract the right-hand side for a ending accounts receivable balance of $3,500. Supplies is an asset, so we're going to add these two numbers together and so forth here. The same with land, our beginning balance, our purchase in the period. Now, supplies, land, accounts receivable, and cash are all assets. Accounts payable, as we can see, are on the right-hand side, right, the credit side. This is our first liability. So let's go ahead and calculate our current liability. All right, so that's what we're going to owe right now at the end of the period, $9,100. Notes payable, all right, we've got things happening on both sides. If we had a question of which side notes payable likes to be on, this is going to have a credit balance because it is a liability. So we're going to come over here, we're going to add up the right side and subtract the left side to get our current balance of notes payable. So we owed these two amounts and we made a payment to reduce this note payable by $4,000. And there's the cash over here, the related cash. The journal entry is above. Now I've gone ahead and added these pieces in. There's no addition here. So following the same logic, we have our common stock with a balance of $9,000, retained earnings $8,300. Dividends, we are going to an account on dealer. It's the D in dealer. So that likes to be over here on the debit side. Service revenue, that is part of our revenue section. So that likes to be here on the right-hand side. Those two numbers are added up. Expenses on dealer are on the left-hand side or the debit side. So those are $4,000. Rent expense is also an expense. And we've got these other expenses here. The next piece that we're going to look at, the final piece, is our trial balance. So as you've done your readings, the purpose of this trial balance is to make sure that our debits equal our credits. So we know how important it is for debits to equal credits. We've seen that all of these journal entries are debits equal our credits. And we've transferred those in the T accounts. One of my favorite things about accounting is there are a lot of checks to make sure that we're doing things accurately. So what this is here as a trial balance is a check to make sure that our debits do in fact equal our credits. You'll see this in the project for our class 2301. You're going to be doing your own trial balances. If you were to accidentally leave off one of these pieces, of your T accounts, this is how you would catch that error. You would see that your debits did not equal your credits, and you would go back and research which of these journal entries did not get recorded here in our T accounts. All right, so let's go ahead and look at what we've got here. So cash. Now, once again, cash is going to have a left-hand debit balance, all right? So some students erroneously will add up the left-hand column and put a number here and add up the right-hand column and also put a number here. That's not the case. We need to have one single balance here, all right? So what we have here, I'm going to come in here and I'm going to use Excel. I'm going to put equals, and I'm going to pull this cash balance here of $4,200. All right. Accounts receivable also has a debit balance because it is an asset. So I'm going to grab my accounts receivable balance of $3,500. I'm going to grab my supplies balance, also an asset, so it's on the debit side. Land has a debit balance because it's an asset as well. There we go. All right, now we're switching to credits. We have accounts payable, notes payable. Those two are liabilities. We have common stock and retained earnings. Those fall under owner's equity. All right, so let's go ahead and update those balances. We have an accounts payable balance here, $9,100. We have our notes payable, $5,400. We have our common stock balance of $9,000. So as you're doing your project, I'm going to keep doing these right here. As you're doing your project, one of the things that is something that's good to look at if you notice that your trial balance is not balancing is make sure that you're on the right side, debits or credits. So if you have an account that likes to be on a debit side, it needs to be over here on the debit side, and vice versa with the credits. All right, so I'm updating my service revenue of $10,700. Salaries, expenses, the last of these are going to be expense accounts. Those are all going to be in the debit area or the left-hand side. We have our advertising expense here, and we have our utilities expense here of $2,000. Now we have the moment of truth. We are going to add up these columns and see if they balance. Now, if they don't balance, that's fine. That means we need to go back and research which of our journal entries didn't get recorded here on our T accounts. Because if all of our journal entries both have a matching debit or credit, or debits and credits that add up to the same amount in balance, then we know that our trial balance will balance. We just need to find where we might have made our error in our T accounts. All right, so let's go ahead and add these up. So I'm going to use Excel here, and I'm going to add these pieces up. All right, oops. Okay, so I have $42,500 on the debit side. Let's add these up as well on the credit side. And great, $42,500. So our debits must equal our credits. Another note on the trial balance. What we are looking for here is for a balance of our debits and credits. This number right here is arbitrary. This is not our net income. It's not the total of our assets. It's not our liabilities that we owe. It is just a number that is the addition of all the debits and an addition of all the credits. All right, thank you guys. I hope this was helpful for you. If you have any questions, please shoot me a post on the discussion board and I'll answer those there. Thanks.